JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 15th of July 2021, so yeah, welcome everyone. Welcome to this Thursday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, check us out here on jfdbank.com and click on the research tab right there on the top. So now then, let's have a look at what's happening with some of the instruments here that I talked about from the beginning of this week. Basically with Nikkei, you can see that so far this idea is kind of working out that I mentioned, and we are seeing a bit of a corrective move here lower. However, if it finds support somewhere around this 28,118 territory, then maybe we could see a nice rebound and a push back to the upside. However, at the moment, guys, yes, we saw the index declining a little bit here, but again, not all is that bad yet, so maybe just we're seeing a slight little correction before another possible leg of buying. For me to consider the downside, well, to be honest, at this point I would prefer actually to wait for a drop below the 27,385 territory right here, and then yes, at the same time we would already be placed below the 200-day EMA and potentially more sellers could join in. Now jumping into Hong Kong's Hang Seng Index, here we have an opposite situation. We can see that if Nikkei lost percent, Hang Seng is gaining a percent. We did get some economic data this morning from China, so it wasn't as bad. It was hoped. Only little slight disappointment was in the year-on-year GDP figure. The forecast was for 8.1, but the actual number came out at 7.9, whereas the Q-on-Q number did beat the forecast and also managed to overcome the previous figure as well. So coming out 1.3, the forecast was 1.2, but the previous one was as 0.6. So yeah, industrial production, Chinese industrial production also performed well, relatively well, I would say. I mean, in relation to the forecast. However, it still came out a little bit below the previous number, but nevertheless, still a good achievement here. Retail sales also from China did do well. So in a way, I mean, oh, and also Chinese unemployment rate also did come out as the previous number at 5%. So here we have, like I said, here we have the Hong Kong's Hang Seng Index pushing higher. It's climbing back inside this rising channel pattern. If it stays above this lower side of the rising channel, then yep, we could start aiming higher. However, as I mentioned before, I would prefer to wait for a push above the 28,326 level first, and then aim for higher levels. Now, the German index, DAX, yesterday we hit a new all-time high, but a very, very fractional move here it was. So basically, we've managed to hit this level here, the 15,810 zones. So that's approximately that we managed to hit, and then we retraced a little bit to the downside. So if we take a look at the cash index right now, where we're where we are currently sitting at. So we can see that we are trading near the 15,765 level. So basically slightly below yesterday's close, and of course below the current all-time high. But if you want to aim for some higher levels, guys, well, I mean, we need to see another pop above that 15,810 zone. If we get that, then yes, this will confirm a forthcoming high and potentially could attract more buyers into the game. But if it doesn't, if it continues to struggle, let's say, to remain above, let's say, or push through this barrier and then remain above it, if it struggles to do that, then, well, I mean, I'm still considering maybe to see a bit of a corrective move here lower first, and then a possible move up again. The Dow Jones Industrial Average. Now here it's also quite an interesting one. Yesterday the index came very close to hitting in the all-time high. The current all-time high is actually near the 35,091 territory, approximately around here. That was reached in May. You can see that yesterday we tested the area near the 35,069 level, and then we drifted back down. So in a way, I would say for now, keep your eyes on some of these levels. So for the downside, for example, if you would like to consider a bit of a larger correction here to the downside, then what we would need here is to see a drop below the 34,814 level right here, and then yes, we could aim for this upside line taken from the low of the 18th of June, and then we would take it from there. But certainly if in case this decides to push higher again and manages to overcome that 35,091 zone, then, well, I mean, this would confirm a forthcoming high and potentially could attract more buyers into the game. Currently the cash index sits around the 34,875 level. So basically for now we are kind of stuck here. So let's see which way this is going to break out to. The dollar index drifted to the downside, and well, initially there was hope that we could see this one pushing higher and kind of moving further north. However, the index failed to stay above that 92.74 territory and started kind of moving lower, and you can see this is what's happening right now. We are seeing a bit of a decline here. However, as I mentioned before, and I'll stick to the same idea, that in order to consider maybe a bit of a larger correction to the downside, well, a drop below the 92 territory would be needed. For the upside, as I said, that 92.74, 75 territory, that's what I'm looking at in order to consider higher levels. Gold. Gold is, of course, enjoying the weaker dollar, and this is what I said to you yesterday, guys, and actually from the beginning of this week. Basically, at that point in time, gold didn't look very strong. But if the dollar index pushes lower, then of course the yellow metal here could push higher and could break this 1818 level, and yep, as you can see, this is what happened, and yesterday we stayed above that barrier, so now it increases the chances for a further move north here, and of course for now I'm going to aim for the 1845 level, or even this downside resistance line taken from the high of the 1st of June. So yeah, let's keep an eye on this one, guys, and like I said, if by any chance the commodity drifts back down and falls below the 1794-95 territory, that's where I'm gonna get a little bit more comfortable with the downside. Now jumping into silver very quickly, and yes, silver is also enjoying the weaker dollar right now and pushing higher. However, we're nowhere near still one of my targets here, the 26.73 territory. I spoke about this level, and what I said before was that in order to consider slightly, or to get a little bit more comfortable with slightly higher levels, and yes, a break and above this area would be needed. So for now, we are just kind of stuck here near these EMAs, the 100 and the 21-day EMA. So to be honest, I'm going to take a bit of a careful approach here, guys, and like I said, I need to see a breakthrough one of these levels first before we could consider the next short-term directional move. And for the upside, as I said, I need the 26.73 territory. For the downside, I need to see the 25.71 level here getting violated, and then of course we will keep an eye on that 200-day EMA, which if it fails to provide support as well, then yep, could open the door towards lower levels. Now the interesting bit here, WTI oil. So looking at this picture, and this is what I talked about yesterday, that there was a bit of an issue here with this upside line, because as we saw that upside line kind of acting as a resistance because we were testing it from underneath, and well, it continued to do so, and this is what I warned you yesterday about, that if that upside line somehow does its job and continues to provide, well, resistance. I mean, it's a bit of an odd sentence maybe, but nevertheless, I mean, you can see that it worked out. So now we're seeing a drop below the 21-day EMA, and if we can continue to trade below that EMA, then certainly lower levels here could be met, and well, we could aim initially for that 70.79 zone here, marked by the current lowest point of July, but if that gets cleared, of course, then yes, lower levels could be met, and we could aim then for the 67.94 zone, somewhere approximately around here, or this upside support line taken from the low of the 5th of April. Now it's a bit of a tentative line, but nevertheless, for now I'm going to keep that on the chart. Ethereum, very quickly on this one. So the crypto world kind of is not really looking as interesting as it was back in May, of course, but yep, for now, I mean, we can see that we are on a slight descent here, so we're currently trading below all of the EMAs, so in a way there is a good chance for further declines, but again, in order to be a little bit more on the safe side, probably just we'll go step by step on this one, and if we do see a drop below this 1865 territory marked by yesterday's low, then my next target will be the lowest point of June near the 1701, or if you want to round it up here a little bit, the 1700 zone. So that psychological level could be the next target if we drop below this 1865 level right here, which is yesterday's low. Now, in terms of a few pairs, AUD and ZD, guys, now this was an interesting one yesterday. Yesterday, after the New Zealand Central Bank, the interest rate decision here, we saw this decline, and yep, basically the New Zealand dollar strengthened against its Aussie counterpart, and we saw the pair kind of drifting back below this downside line, and then ending the day below the 1.0650 territory, the level here that I talked about previously. And also what I mentioned yesterday was that even if we see a bit of a correction here back up, if this barrier continues to provide resistance, then maybe another slide here lower could be possible, and basically we could see something like this happening here. So for now, this is going to be my main scenario. If the 1.0658 territory continues to provide resistance, then yes, another slide here could be possible. So let's keep an eye on that one. In terms of the upside, well, we, of course, not only that we would need to see maybe a pushback above this downside line. However, looking at this, I mean, we can actually remove this downside line because it got violated and no longer valid. And what I'm going to focus on right now is something maybe a little bit on the something bigger a little bit here. So, for example, this downside line taken from the high of the 29th of March, which could also play out. However, it's not an ideal one. It's still a tentative one, because if you want, I mean, you can also draw something like this here. It's also a tentative line. Maybe we probably would rather stick to this one because this doesn't really carry much significance, the one that taken from the 29th of March. So yeah, actually let's get rid of it, guys. So let's focus on this little short-term tentative downside line taken from the high of the 18th of June. Let's see if this is going to play out or not. But again, when I mentioned previously the upside, I said that I would prefer to wait for a push above that 1.0728 territory, and as you can see, to be honest, this still remains valid. And if we do see a push above this level, that means we would already break the downside line. We would push through most of these EMAs, and potentially more buyers could join in. But again, at the moment, guys, it's not really a bull's field here. It's more of a bearish field. So so yeah, let's see how this is going to play out here. And like I said, we'll continue keeping an eye on this 1.0658 territory. Quick update on AUDCHF. So this one is an interesting one. A while ago, I mean, I haven't looked at this one for a few days actually, maybe in a few weeks, but basically after we dropped below that 200-day EMA and stayed below it, then yes, we saw a bit of a correction here to the upside. Currently we can see that the pair is struggling with the low of the 11th of February here, the 0.6868 level or 6869 level here. It's struggling to push higher, and currently that area is acting as a good resistance. So what I'm going to do here right now, of course, is I'm going to stick to the downside if this whole area here continues to provide a hold up. So not only this barrier, the 0.6869, but also this 200-day EMA. If all this in combination continues to hold, then certainly there is a greater chance for a bit of a decline here. Now jumping into USD Gpy, and look at this as well. This upside line also did provide resistance. So as oddly as it sounds, but yeah, we were testing it from underneath, and you can see that's the result we got. This is what I talked about yesterday. I said that also, that if we drop back below the 110.42 zone, then well, this would also place the pair below the 21-day EMA, and potentially more sellers could join in. So that's what happened, and yep, now we've drifted to the 109.72 territory, approximately around here. We're still a few pips away from hitting that level, but I would say that now that's going to be the level that I'm going to keep an eye on, because you can see that that's the low of the 21st of June. In July, we did get a hold up near this level as well, although we had an overshoot here on the 8th of July, but that was a false breakout here. So basically what I'm going to, like I said, I'm going to stick to this level, this 109.72. If we see a nice good drop below it, and we see the daily candle remaining below it, then certainly yes, further declines here could be possible. Now, the slightly opposite scenario here on the USD Cad, and here we have a situation where the USD Cad is pushing higher, and to be honest, it's not really the strength of the US dollar. It's more of a weakness of the Canadian dollar due to falling oil price, yep, we're currently still stuck in between those two levels that I recently mentioned, the 1.2439 level here on the downside, and the 1.2590 on the upside. So what I'm going to do here right now, of course, is basically wait. I need to see a clear breakthrough one of those levels before I could consider the next short-term directional move. Now jumping into USD CHF here, and here we have a situation where it's drifting lower. Also, the dollar is showing weakness against against a safe haven currency here, we are now dropping below that 0.9142 territory I spoke about previously, and also we're falling below the 200-day EMA, and if we stay below it, then yes, we will aim for the 0.9094 level here, marked by the high of the 13th of May, or we could target the 0.9052 level marked near the highs. And let me just double check this very quickly. There we go, 0.9054 level, and yep, I think it's this one right here, 0.9094. So there we go. These are the nice beautiful numbers here. So the 0.9094 0.1994 is the high of the 12th of May, and the 0.1954 is the high of the 4th of June. So for now, I'm going to aim for those levels, and especially, like I said, if the rate continues to trade below the 200-day EMA. Now, jumping into GBP USD, guys. So I think according to the economic calendar, we did get the unemployment figures here. So those came out a little bit higher. The unemployment was higher than the forecast and the previous. So yep. I mean, but to be honest, not much has changed here. Average earnings did improve, so basically it's a bit of a mixed story here. For now, I would say we'll keep an eye on the overall picture, because as you can see, on one hand we are stuck still above this upside line, tentative of course, this upside line taken from the low of the 18th of May, and we are also stuck below this short-term tentative downside resistance line taken from the high of the 1st of June. So in other words, we are kind of stuck, and like I said, we are just gonna continue observing this one. And to be honest, I would rather stay like this, stay maybe a bit neutral, because yes, we could move here towards one of the lines here, but again, I would prefer to wait for a violation of one of those lines in order to consider the next kind of directional move here. GBP Cad also pushing nicely, oh not also, but well, also like USD Cad is trying to push higher. The pound is a little bit stronger than the US dollar here at the moment, and you can see that we have a greater push north here against the Canadian dollar, which is of course weakening due to falling oil prices, and we are seeing here a nice push higher. We managed to reach this 1.7362 territory, spoke about this level, but we need a clear break through that level in order to aim for some higher levels here. So at the moment, kind of, I would say half of the mission is complete. The remaining part is to see a further move above this area and then target the 1.7458 level, and then we'll of course take it from there. But at the moment, guys, I mean, like I said, it's an interesting one. Let's see if we can clear this barrier, the 1.7362. If we can, then yes, we'll aim for some higher levels. Euro against the JPY, so the Japanese yen, and yep, we're seeing a bit of weakness kicking in here in this pair, and yep, we're currently sitting near this 130.04 level. I spoke about this in the beginning of this week, if you remember, because basically, and actually last week as well, because we had this decline, but I said that if this highlighted territory does provide a bit of support, then we might see a nice rebound, which could mean that maybe we're forming here a potential descending triangle, which according to all the TA rules tends to break to the downside, of course, but we need that confirmation break first before getting comfortable with further declines. But at the moment we're not really seeing that, so we're just kind of seeing a bit of a flirtation here with this hurdle. Can we drift further south? Well, just let's wait and see. But again, we do have an important obstacle here as well, slightly below that area, and that's basically the low of the 23rd, I think, no, actually the low of the 8th of April, near the 129.57 zone here. And as you can see, last week the pair also found support near this level, so and then rebounded. So basically, even though if we drop below this 130.04 level, yes, this could open the door towards lower levels, but we would have to be very careful near this 129.57 zone. If we clear that, then yes, we could see further decline towards the 200-day EMA, and then we'll take it from there, guys. Now, euro against the US dollar. So yep, the euro USD. rebounded yesterday from this 1.1772 zone and remained above it. So we didn't really drop below this level again. This is what I said to you yesterday, that wait for that drop, and if we do see that drop, then yes, this will confirm a forthcoming lower low, and potentially more sellers could join in. But again, we didn't get that. We saw a retracement. For now, I would say I'm gonna keep an eye on this little area here. We are seeing a bit of a nice, like I said, move push higher, but will it stay? Will we see another higher move? Well, I would say that if we, for today specifically, then if we stay somewhere above this area, the 1.1836, which is the inside swing low here of the 12th of July, and is near the high of yesterday, if we stay above this barrier, then yes, we'll aim for a larger correction here to the upside. But if we don't, if we start falling back down here, still, for me, the preference for the downside is a move below this 1.1772 zone, and then yes, this will confirm a forthcoming lower low. But at the moment, guys, it's like I said, it's an interesting one. I mean, if DXY will continue drifting lower, then certainly we could see a bit of a larger correction here to the upside on EURUSD, where we will aim for that 1.1895 level then. And then we'll take it from there, guys. Now we'll see if it wants to push further north. If it wants, then yes, we'll reevaluate things again. But for now, at this point, for today, maybe even if it stays above the 1.1836 territory here, then yes, I'll aim for the upside. So guys, that's it for this session. I really hope you found it useful, and thank you very much for watching and listening, and thank you very much for joining in and you know, spending your time here with me. And so yeah, I really appreciate that. So thank you for the likes as well. That means a lot. Also, just wanted to let you know, if you all want to join in later on, for example, with my colleague here, Haralambos Pisoros, for a more detailed fundamental analysis of the market, you can join in, check out our videos, check out our calendar, and yep, and the video will be uploaded later on. So yep, yeah, I believe you can find it useful as well, guys. So but for now, I hope you have a fantastic trading day. Stay safe, guys. Have your stop losses in place as always, and everything will be fine. And catch me tomorrow as always at my Traders Espresso, 6 o'clock GMT time. Thank you very much, and bye-bye.